we're talking about game plan, home buying game plan. And one of the reasons I wanted to talk about that is because I had some buyers who need to sell. And just like everybody else, and Lauren and I have done this too. Like, even though you may not be ready to buy that house because your home isn't listed yet, you still want to go out and see properties.
Yeah.
But it's important to, I guess, to understand as a buyer seller in that position, that going out and seeing properties that you like when you're not in a position to buy, you're going to get worn out after a while doing that. So it's good to go ahead and have a game plan, even if you're not ready right now. Know what your game plan is and be ready to put that game plan in place.
And that's 100% right. And that's the same thing on the lending side, right? So if you're selling to buy, are you already fully approved? Do you have all your documents to your lender when your place is sold? Or what's option B? In the case your place doesn't sell, do you qualify for 2 mortgages? Can you take equity out of your current home to buy a new home as a bridge loan or a home equity line or whatever you want to call it? Like,
Sure.
What's option B on the lending side? And, once you start being prepared to sell, buy.
Okay. Yeah, absolutely. And we, another thing we talked about that I wanted to go over too is, let's say somebody, you have a client who owns their home. They don't want to sell that home. They want to keep that one and buy another one, right? But they need some of that equity to use as a down payment on the next home, and they're going to rent out the current plan. I know you've seen clients do that before. How does that process work? I mean, if let's say they get a HELOC, is that normally how they would do that, or how would that work?
Depends on what their current interest rate is on their current home that they're going to be renting out, based on, are the rates lower now than what their current rate is, to where they could actually maybe even save some money if they took cash out at a lower rate. Right now, it's probably, if they have a really low rate, let's say they're in the 3s or the high 2s, or even really the 4s, to be honest with you right now, it might make more financial sense to do a home equity line until rates drop, and then do a cash out refi and combine both of those mortgages, your first and the second, at that time.
Okay.
So it's almost case by case. What we don't want to do is, let's say you have a 30-year fixed rate at 3.25. Well, there's no reason for you to go from 3.25 to 6%, right? Unless you're really taking out some cash, and maybe you are going to be paying off some other debts on your credit to put you in a better financial situation. Yeah, it might make sense to go to a higher rate, just all depending on what the interest is on those accounts that you could pay off outside the down payment.
So let's go with that home equity line scenario. So
Yeah.
Let's say that I wanted to keep my current home,
Yep.
and purchase a home that's more expensive than the home that I live in
Yep.
now, and I need $100,000 of equity out of this home to purchase the next home. And my wife and I are going to purchase the next home together. So we need, both of our incomes to prove on that next one. How does that scenario work, and what would keep me in that scenario? What issues are we going to have along the way with having the home equity line of credit, taking out a home equity, taking out the home equity line, and taking out another mortgage? What issues do you run
Really,
into?
the only thing, it's going to come down to the income level and the total debt to income ratio. Because if you got to think, in that scenario, we're qualifying you with your current mortgage payment, the home equity line, and the proposed mortgage payment for the new place. So we're pretty much qualifying you with 3 liens.
Mm-hmm. Yeah.
So, I mean, you got to be prepared for that. But what we can do is we can also order a report, an appraisal on your current home, or if you already have it leased out, let's say you already have a physical lease that you already know you're going to be leasing it out, we can actually take that lease and take 75% of that lease to offset your current mortgage and the HELOC.
Right. Okay. Oh, the current mortgage and the HELOC.
Right.
Okay.
Well, because you got to think those two are tied to the same property.
Sure. Okay. So, right. So if you're, let's say your mortgage is $1,500 and you're able to secure a lease at $2,000.
Right.
So
So
are you,
if you're taking 2,000 times 75%, well, that's 1,500.
well,
So
you're
that would
back
take care of that would take care of
of the mortgage?
of that payment. So it would pretty much offset it.
Really? Okay, so where does but wouldn't you need to lease it out for more because of the HELOC being having the HELOC as well?
Well,
Is
it
so
depends
is
on
the
what the
HELOC
market.
a separate payment?
The HELOC's a separate payment, but you don't really know what the market rent is in that area, right? Maybe it's 2,500, and you can get 2,500. Great,
Hmm.
but I think a lot of it has to do with the market rent and what you can actually get the place to rent for.
Gotcha. So if what you rented out for doesn't fully offset your current mortgage and the HELOC, then
It's a negative number,
yeah, so that's going to go
but
against.
that negative number is a lot smaller than us counting 2 full payments against you.
Right. But it's definitely going to bring down what you're going to qualify. It's going to bring down, as far as debt to income ratio, what you can qualify for on the next house, right?
Depending on your income level.
Yeah.
If it's somebody does very well financially and doesn't really have a whole lot of debt outside their mortgages, yeah, they're definitely going to be able to qualify with some higher than somebody who has, a couple car loans and, student loans and credit card debt and all that other fun stuff. Yeah, I mean, that stuff's going to add up that we have to count in their debt to income ratio.
Sure. As I talk to other real estate agents, and definitely like inventory is still low, like we've looked at every month, but like we are feeling this shift right now. Every agent I talk to, listing agent, buying agent, they're all saying the same thing. If you're working with buyers right now, you have a lot less buyers than you had before. And if you're a listing agent, you're nervous before you list any property anywhere, because you're looking at the comps in the area and they're sitting on the market for longer. So you're like, all right, well, no longer can we look at a comp and go, we're going to price above that. Now we have to like maybe even price a little bit under it, because the ones that are on the market are sitting for longer. And you have to be prepared to position. And, it's for the first couple months that it slowed down, I was like, oh, well, it'll come back around or whatever. But now it's like, man, this is happening. Like, it's happening right now. Like, we're feeling this shift right now.
New construction's even worse than the resale.
Mm-hmm.
They're begging people to go to new construction. They're giving agent bonuses. They're giving more seller credits. They're paying for the buy downs that we talked about a couple of weeks ago. I mean, they're doing anything they can to get rid of inventory, and a lot of them aren't even building anymore. I know builders in Atlanta that are not building right now because it's too risky to have inventory just going up and sitting.
Right. That's good to hear, because actually they're getting, thinking that way and getting ahead of it, because I saw there's some houses going up on Riverview Road over there. Did you see that over by the Reformation? Uh-huh. They're building some like townhome style. They're selling, like some townhome style right beside those apartments, which is awesome that they're doing that there. But when I passed it today, I was like, man, I hope they're prepared and pricing right. You would hate to see them build a lot of houses that just sat there,
Seriously,
in that area, and they're building stuff fast over there.
But then again, I mean, people are still buying homes, right? I still got contracts this week. People are still buying homes.
Yeah. I mean, like I said, the one that I have, we talked about the one that I have in Douglasville. We got 3 offers on it. We had, one, we were under contract for like 2 weeks, and then that buyer backed out, and one of the other offers was still there, and they jumped on it really quick. So yeah, there's still, things are going under contract. I mean, every day, because right now I'm working on building this moving company as well. I'm reaching out to real estate agents, and every day the agents that I'm reaching out to are the ones who went under contract in the last couple of days, to see if we can help their clients with the move. And there's a lot every day. There's a lot. I mean, some days I'll look at it and there's 70 agents just within like, I'm doing normally like within 25 miles of Atlanta, and there's, a new 70 listings that went under contract. So
Yeah, I mean,
homes are selling.
yeah, I mean, I tell people all the time, you got to, you can only control what you can control, right? And you got to think about real estate as a long-term play. You're not going to buy a house today and sell it in December. You're not going to buy a house today and sell it in March,
Hmm.
right? It's probably let's just say it's a 5-year play. You know what I'm saying? It's like you don't buy stock to sell it tomorrow unless you're a day trader and that's what you do, right? Like, or, you're not going to stop putting money into your 401k because of what's going on in the
Yeah.
world. So
Right.
that's kind of like the same thing as housing, right? You're going to buy a home to go live in it. Just like you would, it's not like you're going to stop paying your rent, right? You're literally going to go into a house, you're going to make that payment until wherever you need to go, until you can refi or sell and buy again, right? So I think people start paying a little bit too much attention to the news, including myself, and they just need to realize, like, hey, buy the house, you're comfortable with the payment, make the payment, hold on to it, and keep going.
Yeah, exactly. I mean, we talked about, we've talked about that on just about every episode. Once that mortgage payment is locked in, it doesn't go up. Your rent rate is going to continue to go up. As you pay down that mortgage, you're going to build equity. The home is most likely also going to appreciate in the time that you have it. We're not talking about homes depreciating. We're talking about properties just not appreciating at the rate that they have over the last 2 years. So
maybe at a little bit healthier level.
Yeah.
Not
Yeah,
not 20%.
Yeah, 3 to 5%, something like that. Right now we have seen like average price has gone down in the last 2 months, but that was from June to August. It seems like that happens every year, except for 2020, that did not happen, but just about every other year that happens. I mean, we're definitely in a shift right now. We're just gonna have to see where this comes out in the end. All right, man. Well, I appreciate it. We won't do it next week, but we will do we'll just start doing it. Now, I forgot to mention that we're not going to do the weekly state of the market. We're going to do a monthly, once a month market update. You said maybe the second Thursday. We'll kind of figure
Thursday
it out.
of the month. Just spend, yeah.
We'll kind of figure it out, and just to give like the meat of what's going on, and hopefully some folks will watch us.
Yeah, I mean, you'll do your 15, I'll do my 15 of the market in the mortgage world, your deal, and we'll call it a day.
All right, sounds good, man. All right, talk to you soon, buddy. Have a good one.